All right, we're nearing the end of IB. We're doing a double bottom test. And obviously, want to remind traders to use risk capital you can afford to lose if you're playing this game. There's a lot of well-meaning and well-intentioned stuff that goes on Twitter, and I applaud especially these other traders. Found a bunch of traders over the weekend. A very good trader that PAX 777. And there's a lot of great stuff from traders like this who don't want anything in return. They just trying to help other people. But we are in a capitalist society, and you can't take good intentions and go buy your groceries or a cup of coffee or whatever. So, I see no reason why people can't say, "Hey, my education is worth a lot of money to you if you have a few bucks and you apply it and you learn it." I think that's silly to think that you have to be altruistic all the time. And I also find that people don't necessarily, if they don't have skin in the game, they don't put a few bucks online, they don't take it as seriously. Right? We said we're under 95, and under 95, I'm sorry, '05, the market is still looking for support. We are in an umbrella trade. We have suggested till we get back up above this '05 to 12 area, market is still searching for support. Zika's made some great posts today about different locations and the reasons why we think these are important, like the 90 and a quarter. We don't use just fluff numbers. We have specific objective criteria. And we're going to continue to do that and hopefully educate those of you who are in here as to why we see patterns that repeat. A reminder, we were talking about somebody I'd seen posted on Twitter that really the OTF concentrates on the four elements in the bar: the open, the high, and the low, and the close. So we've corrected that, and Brian, thank you for coming up with the right answer, that there are 5 pivots in a bar. The fifth one being the middle. You cannot trade futures, especially if you don't know the middle. So you want to be aware that there are 5 different pivots: the open, the high, the low, the close, and the middle. And all of those factors are important. So if you look at it from that perspective, we really have a Z pattern right now, right? Where we've gone under and over and back to the Z pattern. Happens a lot. And then we're going to look to these next 2 points right here as the next support. If they break, then this whole swing down here opens up. Basis this chart, we're using 78 as our big support for now. There's another gap just below us. At 87 area. So we've already closed 2 gaps today, and possibility exists we could close that 3rd gap today. And a reminder for those of you new to the room, 85 to 82 is a huge area for the boys. And you got to break the 88s before you even think about getting to test 85s, 82s. Just the way it works. I can say that with confidence after years of seeing the markets move. So we're going to use that 89 and a quarter, call that 89 and a quarter as our unfilled gap just below us. And a reminder to see where we are. in a tunnel through time. So we are just about a point away from that gap that was never closed. And that would be back on the 11th and 12th, the end of the day on the 11th, March 11th. And you need an RTH chart to see that. So we've closed one gap, right? The 1075. We've closed a second gap at 97s, and the third right down here, just below, it's about a point below. Risk and reward comes in. A lot of people poo-poo risk and reward, but as a bot, guess what? You want 1 point for 89. You want 1 point for 92, 93, 94, 95. Risk reward is very important. Don't poo-poo it. Range type trading so far. And we said probably a two-way day. I'm looking at NQ and I'm seeing that they're trying to hold their lows. Into the IB, we like to have traders in a directional move. Make sure you are paid coming into the end of IB. And typically, this is the way we like to look at the market, where we've got a resistance zone intraday, a support zone, the green ellipse, and then the yellow zone is going to be the pipe. And that's going to be where 40% of the day's range takes place typically. And these will adjust, obviously, as the size of the day's range changes. Those proportions will stay the same, but the actual details of that will change. And a reminder, as you come into the end of the hour in a directional move, you want to make sure you are paid. And then the IB low is support until broken. Maybe got one more bounce we can hit today. Anybody's played short side, you should have your VIG already. Your VIG should be 4 to 5 points per contract per day. And that allows you to survive and treat this like a business. Each moving average gets their turn to say, hey, my turn, my turn. Green, red, blue. So basis this chart, we can still understand the importance of this 9 area, 10 area as resistance. We can still see the importance of this O2 area. And we look to see now, do we have an angel? Do we have a demon? RTH. So to see that, we're going to go to an RTH, angel and demon setup. Give us a little bit tighter setup. And so now we have a range just for RTH. And we're looking at things like our angel right here, and our demon right here, and the middle zone. And we'll show you how to construct those. And professionals understand that this is typically a range that is traded. As long as a demon is in place and does not have its head taken out, the top of the bar taken out, that's in control. Same with an angel. As long as the feet The bottom of it aren't taken out. That's in control. And then the battle is in between them. And this is basis RTH. And we also have a range set up for RTH, regular trading hours that begin at 9:30 and end at 4:15, and then have a little bit of time after, another half an hour till 5 o'clock, which are extended hours. So we can see just in the RTH that this O2 is our middle, 175. And again, risk and reward. Do you want that extra point, or you want to swing back towards the middle? Very, very important idea is that a lot of traders don't understand the significance. So it's like your mother's over there saying, here's a cookie. And your dad's over there, he's the patsy, and he says, here's 10 cookies. Which way do you want to go? Thanks, Dad. Anybody that is playing this, and this high right here, this new high above the 99s, it shows me that we may be starting another little whack-a-mole pattern. And these are important ideas, as you'll see as we keep going. A higher high in this bounce, if we'd stayed underneath this, and much more damaging to the long side cause. Doesn't negate the idea that, you know, we're below Friday's lows at 05 area, but it tells me that we could be starting to bounce a bit. This next swing will determine a lot. Whether we hold and just continue to do range type trading, or we get to test a new low. Trend traders are hitting bounces. Guessers are trying to say, I think the low is in. And we can see fast up, fast down, chop, 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 bounce. Now, hard to believe, but let's review something like a 456. You won't believe this, but last night I wake up, I look at the clock. It's 4:56. Oh my God, I got to get up. I said, no, you're not. Don't be an idiot. Plenty of time today. Go back to sleep. And I did. I said, heck with it, I'm not getting up. A 4:56 trade comes off the floor, or comes off the high, and it will travel to either the 40% back, which is this line right here, which we've just achieved, or the 50 back, which is right here at the 04.38, or a 60 back, which would be at 2807.91. We're obviously calling that 2808. And that's our 456 trade, and it happens all the time. And you never know whether you're going to get a 40, a 50, or a 60 back, but typically throughout the day, you're going to get one of them. You're going to get at least a 40 back, a 50, or a 60. And if we go more than that, more than the 60, then it tells us, hey, you know, now I guess we have to look back and say that this was support, and now we're going this way, trying to test the highs. So an important idea, especially if you get back to the 60, because that's a little bit stronger bounce, and it tells you that the trend may be leveling out. 50 back is normal. 40 back is a weak bounce. 50 is normal. 60 is a stronger bounce. And that usually tells me the low may be in if we get all the way back here. And then I'm going to be very careful about a squeeze from the pipe, saying, okay, I guess that's support. So pretty important swing going on right now, trying to hold the lows and come back and test the middle. Hope that helps. There's a lot of these things that I think will, as you review them, will help you to cement ideas that aren't necessarily well understood by even traders that have been around the block for a while.